Okay, I think we'll get started. Welcome everyone to Merkle Science RegWatch, the Swiss crypto regulation roadmap. My name is Gaby. I'm the Director of PR and Corporate Communications at Merkle Science, and I am thrilled to be joined by our panel of excellent speakers, and I'll let them introduce themselves shortly. Before we begin, just wanted to give a quick intro on Merkle Science. We are a next generation predictive cryptocurrency risk and intelligence platform. So we help crypto companies, financial institutions, and government entities detect, investigate, and also prevent illegal activities involving cryptocurrencies. So we really see our role in the ecosystem as building the infrastructure that is needed to ensure that everyone can transact with crypto safely, and so that the innovators and the builders of the crypto ecosystem can really scale and grow their businesses. I am joined by a group of really great speakers today, including Bruno Kellenberger. Bruno is the CEO of KYC Spider. Also joining us is Ekaterina Anthony, who is a compliance expert at GWP and also a board director at the Crypto Valley Association. And last but not least, Lars Hodel, who's the head of legal and compliance at Bitcoin Suisse. So I'm going to let them introduce themselves quickly. Why don't we start with you, Bruno?
Thank you, Gaby. A pleasure being here. My name is Bruno Kellenberger. I'm the CEO of KYC Spider, and our mission is basically to help clients to digitalize compliance and to automate those processes. And in that context, obviously, we have a lot of clients in the fintech crypto area, and we are also collaborating, obviously, with Merkle Science, which is available on our platform. So happy to be here. Thank you.
Thanks, Bruno. Ekaterina, do you want to introduce yourself?
Thank you, Gaby, and thank you, Merkle Science team, for arranging this session on crypto regulation in Switzerland. As you already said, I'm a DLT team leader at Geissbühler Weber and Partner, GWP. We're a consulting boutique serving compliance and regulatory matter to the financial sector in Switzerland and Germany, and also Liechtenstein, out of Zurich, Zug, Geneva, Frankfurt, and Vaduz. I also represent Swiss Crypto Valley as a board member and act as a co-chair of Crypto Valley Association IML Task Force, and I'm really happy to share my expertise today.
Awesome, so thrilled to have you here. And last but not least, Lars.
Thanks, Gaby. My name is Lars Hodel. I'm working close to 4 years now as head legal and compliance of Bitcoin Suisse, a Swiss financial intermediary specializing in cryptos at the core. So we offer a wide variety of services. I'm mostly also interacting in my role with government authorities and also participating in the Crypto Valley Association and other expert groups in regards to AML and general Swiss regulatory approaches. So very happy to share insights today.
Excellent. Thank you. So let's get into it. So last week, of course, is the June FATF plenary. Definitely a lot to talk about, and with all the guidance has not been released yet, but I think there's definitely a lot of areas that we can discuss. So Lars, I do want to start with you. So what do you think from your perspective and as one of the leading crypto businesses in Switzerland? What are the most notable updates from this year's meeting, and how do you think they're going to impact Swiss crypto businesses moving forward?
Yes, happy to do so. As you said, the report is not yet out. So we have seen the publication of the press release, which is nothing out of the unexpected. So it was very much expected that we see a press release. Currently, the FATF is under German presidency, and they have once again confirmed what are their strategic options and where they want to put the focus on. And it's also no surprise that virtual assets and the regulation of virtual asset service providers are still a high focus to the FATF. It is important to understand how the FATF usually deals with their initiatives. So we have seen that they published the paper, and then it was open for consultation, and a lot of industry participants have provided feedback to this publication, where they, especially in the area of transacting with virtual currencies, put new regulatory standards, and also tried to encourage the member states to align with these FATF recommendations. While only the press release is out so far, it's nevertheless interesting that there was a short summary of the legal assessment in the country, so the member states of the FATF, where they could observe that majority of the countries did not have specific virtual asset service provider regulations in place. And I think this is one of the biggest differences to Switzerland. We have a very strong regulation in place regarding virtual assets. And I think this is one of the key takeaways, that the report is not yet published, but even in the press release, virtual assets and the service providers connected to it are mentioned publicly. So they are mentioned, the countries are mentioned. And I think this shows again the strong focus also under the German presidency.
Yeah, absolutely. Well, certainly, you mentioned that a lot of industry reacted to the draft guide. Of course, NFTs and DeFi are the two new areas that people most responded to. So let's dig into that a little bit. When it comes to NFTs, just to kind of like break it up a little bit, Bruno, have you seen the use of NFTs in money laundering or other types of criminal behavior? And do you think it's something that the FATF is really concerned with?
And thank you for the question. I think it's a twofold answer, because obviously FATF is concerned, because they are assessing regulations. While on the other hand, I must admit that in particular within the clients we are talking, obviously, we do not see there any intent to misuse those products. And personally, I even do believe that those products from a technology point of view are designed in a way that you can fully transparently follow the paths of a transaction. So from that perspective, it's quite a safe product if you basically treat that with the respective tools. And so I honestly didn't experience there any money laundering activities around that, but to be honest, we are talking with clients who want to adhere to the AML guidelines. So usually, I mean, the others wouldn't talk to us. Huh?
Yeah, that's a good point. It's almost like self-selecting for people who are, want to be compliant and follow the rules. What about on the DeFi side, Ekaterina? What do you think are the industry's concerns when it comes to regulating DeFi? Because I think, out of NFTs and DeFi, that portion is probably the portion that industry participants are reacting the most to.
Well, I think Lars already mentioned that the approach of FATF, for example, where they publish the consultation for the private sector, which was in March this year. And just to remind that this time the area of the focus was stablecoins, decentralized finance, and peer-to-peer transactions, is also unhosted wallets and travel rules. And for example, on CVA level, we responded with a consolidated consultation paper where we outlined several things that should be better explained, and the position of the private sector should be taken into consideration. So just also to remind that the perspectives has been changed dramatically, and the definition of VASP and virtual assets is now broadly expanded. It was a parameter-based definition, but from an AML perspective, it is now anyone acting as a business on behalf of customer and facilitating virtual assets activity, like developers of software, smart contracts, some matching mechanism platforms, peer-to-peer, and they all can be considered VASPs. And according to FATF requirements, the use of automated process such as smart contract to carry out vast function does not relieve the controlling party of responsibility for past obligations. So in DeFi, where the smart contract operates and all transactions are managed by the individuals themselves, the ideology of traditional compliance will not work. And the principles and rules of preventing the different type of crime should be really different. It built the DeFi mechanism is built in transparency. Anyone can look at products data and inspect how the system works. So here also, the concern is the definition of DeFi as a, what is the functionality? What is really DeFi? Does the platform, decentralized platform is truly decentralized, and does the platform developers have the power of disposal towards the private key and can access them? Can the community block the wallets in case of extraordinary situation? What can be the rules? And it's, as I said, it's clear that what FATF proposes, it's more suitable for traditional methods of the KYC AML identification. So when we target the DeFi, traditional frameworks will not always answer the questions to safeguard DeFi users. And also we have a question about privacy of these users. And I would say that this is the key questions now still, what will be the future of this industry? Because we believe that the industry is growing very fast, and I personally think that somehow the traditional industry will move to decentralize technologies more and more, where we already estimate billions in dollars terms. So, and we need to still answer the question how the DeFi industry to become to get into the larger scale can be adopted in line with the financial regulations, and it's all open questions still.
Yeah, certainly. And I think you bring up a lot of interesting points. And I do think, around the world up to now, there's been a lot of trying to take what has been used in traditional finance and trying to adapt it to cryptocurrencies, digital assets, virtual assets. And we are starting to maybe see a little bit of the limits of where we can actually take that. And I think that kind of, pivots really well into our next section talking about travel rule, because I do think that especially the travel rule, we are starting to see some hiccups. There are questions with regard to whether or not there's enough technology that's advanced enough, or whether it's a sunrise problem. So, I do want to ask Lars and also Ekaterina, but this continues to be a big point of discussion amongst global regulators, and jurisdictions all around the world are really having trouble implementing it. There has been news this week about the US travel rule working group, where the big exchanges are coming together trying to come up with their own travel rule solution as well. But from your perspective, and I'll start with you, Lars, and Ekaterina, I would love for you to hear your perspective here as well. Why do you think it is so difficult for the space to implement the travel rule? And what are the challenges that the industry is really facing?
I think there are multiple factors which lead to this current situation. So the first one is crypto is decentralized, right? So we have a lot of different actors, we have a lot of different jurisdictions which participate, and also crypto is coming from an area where people tried to do something. If it worked, it worked. If not, then they tried something else. And here with the travel rule, we have a huge challenge from a regulatory point of view to really make the sender and beneficiary information available. So we have different industry groups which are trying to implement their standard. I think it's also a good thing that there are different standards competing. So we also have the benefit of the decentralized approach. So the the huge amount of actors and jurisdictions involved makes it complicated to just have one solution that fits all. In addition, there is also the topic, and we have mentioned that already with the FATF press release, that not all countries are even having travel rule requirements for crypto assets. So when you are based in a jurisdiction where you need to adhere to these travel rule requirements, such as Switzerland, and you work with counterparties who do not have a legal obligation currently to work with this travel rule requirement under their domestic law, then it's also difficult to implement such a process in a cross-border environment. What I think is Open WASP initiative that is Swiss-based. We have a lot of players. I also think Merkle Science is participating there as well. So this is an initiative which aims to solve the issue by having a decentralized solution which keeps privacy at heart. And I think this should be one of the core facts. In addition, and I think this is important to mention, in Switzerland, we see that the travel rule is already applied as of today, because the Swiss legal basis to adhere to the travel rule requirements was clarified and further specified by FINMA, so the Swiss Financial Market Supervisory Authority, to adhere to these rules also for crypto transactions. And I think this is now more and more getting common in jurisdictions. Also, when we see the press release under the German presidency, that the travel rule is one of the main concerns, because there is a loophole in the view of the regulators that cryptocurrency transfers can be used without adhering to the proper AML checks and duties of the intermediaries. In addition, and Ekaterina mentioned that already, the scope of intermediaries is broadened up substantially. So we see that as part of the new DLT law in Switzerland. We see it in the proposal of the FATF. More and more players in the field of cryptos, so to mention DeFi, for example, are to be considered WASPs. And if we now need to talk with a lot of also, let's say, protocols or even smart contract operators how to implement such a solution, it even gets more fragmented. So it really needs a clear view on how to achieve this goal. And I think in the end, it also needs an interoperability with different solutions. We don't have a crypto SWIFT at the moment. And I personally think this is a good thing.
Right, for sure. Because, you know, having a centralized entity to kind of help with, you know, sharing PII, you know, probably is against the spirit of you know, decentralization. What are your thoughts on this, Ekaterina?
Well, absolutely supporting that Lars just described. We really see a need for the unified approach globally, because we see already a lot of solutions in different jurisdictions which actually very centric locally, and you need to have a good like a universal approach how to connect all of these solutions and taking into consideration technical aspects with you know different requirements, different blockchains. And I would also see here privacy issue, which is still not completely solved, and data protection, because we also see cross-border question of how the information should travel from one jurisdiction to another. And here in Switzerland, as Lars already said, we have FINMA payments on blockchain recommendation document guidance, which was published already in 2019. And I would say Switzerland, one of the unique jurisdictions which already implement the rules where we are not allowed any third-party transactions without identification. And it makes Swiss business also difficult to develop, because we have not the same rules as Lars mentioned in other jurisdictions. And it's also in Switzerland, we also see that companies, banks, they are not really in a hurry to implement these standards, because they don't see the need, not demand. So everyone waiting at the moment. So I guess the new release of FATF will tell us what they will expect, what will be expectation from them in regards to all countries who would like to operate in the transparent IML KYC field, and it's still a question of probably time, because it needs more time to adapt it in different jurisdictions. And maybe one more question is about costs. It's not so cheap to implement. If you just imagine you have one protocol which need to interact with another protocol, then you need to have an extra solution which will connect this different technology together. And for startups, it's probably a question of money as well, So we need to find here we need to have like something in the middle between not to kill the business and allow people still to send information, and as Lars said, probably unique SWIFT for crypto will be the best solution, which will be actually accessible for everyone.
Yeah, absolutely. And I think that's always a concern, right? The cost of compliance completely overwhelming startups, which, for the most part, businesses in this industry are startups, and we want to ensure that there is guidance, but then not so much that it stifles innovation. So I think that's definitely a good point. And I think the privacy issue is certainly of grave concern to everyone. So Bruno, are you seeing amongst your clients or kind of your experience trends right now within the Swiss landscape? Do you think businesses are ready to implement travel rule?
I mean, as also kind of Lars highlighted, businesses who really want to book and market the Swiss booking center, or kind of the Swiss, let's say, regulatory framework, there we perceive really that they are ready, and they have to implement to a certain extent already, and they are doing it also looking forward a couple of years. They just want to do that. While what we experience is a lot of requests from abroad who want to do business out of Switzerland, and they becoming part of the supervisory regime of Swiss Financial Markets Authority. They are to a certain extent quite astonished. I mean, I still do believe that the Swissness is in particular in the crypto scene kind of a quality stamp, which still makes then potential fintechs to still consider to book in Switzerland. But I also see, I think, the concern from Ekaterina that at the end, if we are over engineering those frameworks, we will just see some other kind of strong markets develop besides Switzerland. So far, I'm still believing, and what we see from the request, it's still booming. A lot of fintechs are willing to consider the Swiss regulation as their regulation, but we need to pay attention.
Yeah, absolutely. That's a great point. Also, I do want to encourage just the attendees, if you guys have any questions, feel free to throw it into the chat. We'll work it into the conversation as much as we can, but please take advantage of our great speakers and their knowledge of the Swiss crypto landscape, while we're here. So we can kind of move on to maybe talk a little bit deeper into specifically what's happening within Swiss crypto regulations. I know there has been a significant piece of legislation that was passed, the DLT Act, and there were two parts to it. The first part being enforced back in February, and then now June 18th, just a couple of weeks ago, the second part was also enacted. Lars, I'll throw it over to you. What do you think crypto businesses need to be aware of specifically when it comes to the DLT Act?
Thanks. So I think it's important to first understand the nature of the DLT Act. So unlike other jurisdictions such as Liechtenstein or also Malta with some very specific regulations, the Swiss DLT Act is not a de facto crypto law. it's more changing other relevant laws and acts to better work with the nature of crypto assets. And I think there are a few notable changes in the traditional legal environment of Switzerland, which are super important and crucial for everyone who's doing business in crypto. So the first is in the civil law. There will be a new basis for security, the so-called uncertificated register securities. Ekaterina will speak a little bit more about this, because this is one of the major foundations in civil law to enable tokenization and also the transfer of tokenized assets legally valid. Currently, it was always a little bit struggle to structure it legally correct, so that we also have a legally valid transfer of ownership or a transfer of claim. So this is the civil law aspect of these new type of securities. Then the second one, which is also important, is that the Bankruptcy Act will get amended. So we will have a clear legal provision which states that cryptocurrencies held in a form, either on individual separated custody or on collective custody, but with internal assignment of ownership, will be off-balance sheet positions. So they do not fall into the bankruptcy estate. And why this sounds very technical, it has a large practical aspect, because this will waive the requirement to obtain a banking license if you want to offer custody in this form. However, if you want to have pooled crypto assets in custody, then you will in the future need to have a so-called fintech license. So it's a tinier banking license, which is then suitable for accepting pooled crypto in custody. So this is the civil law basis. On the financial market regulation, there will be a new trading facility, so a so-called DLT trading facility. We can talk a little bit later about the benefits of that license in Switzerland, especially for market participants. And I think this is to be viewed in the light of the FATF and the general acts that are seen in the global space. Also, the scope of the AML provisions was broadened up a little bit, especially when you interact with payments on the blockchain. So if you help to transfer crypto assets, you will be now considered a financial intermediary under the AML law. I would say these are the biggest impacts of this new act for people working in the crypto sphere.
Got it. Anything else to add here, Ekaterina?
Yeah, I think that how Lars already mentioned, one of the important changes is classification. You know, in Switzerland we have a classification of token like utility, payment, and security tokens. And it's actually since 2018, the well-described now ICO guidance produced by financial regulator FINMA. And tokens in this sense are traditional securities packaged into digital form. Within security tokens, it's important to differentiate between forms of issuance, meaning like STO, initial exchange offering, and different type of instruments such as stocks, bonds, and other forms, for example, assets tokens. Initially, we had a tendency to avoid classification as a securities, but now, because of the implementation of the new DLT law, which the part which is now possible, which came into force 1st of February, so we can actually give the attributes of the asset securities to the traditional securities. And the updated Code of Obligation defines that a ledger-based security is a right which, by agreement between the parties, is registered in a security ledger and may be exercised and transferred to others only through this ledger. The key benefits of the new security shares are simplified fundraising, for example, or transfer and recording of shares, and you can generate the digital assembly and voting options using them. And when you create a new startup in a company in Switzerland, you can actually now do it with blockchain shares. The legal requirements suggest that it's important to have an adequate technological solution for the digitalization process. So you can do this on Ethereum ERC20 platform or any other available blockchain platform. And the smart contract will reflect the rules described in the Article of Association. So it's actually really a milestone in the Swiss regulation. And now, to conclude, you can have your shares of the existing company, you can transfer them into digital format, or when you create new entity or you want to tokenize something, you can have actually the same rights as for normal traditional instrument securities.
That is so interesting and fascinating that, you know, it seems like there is a real demand for digitization of you know, traditional assets, and like, you know, giving a lot more options and innovation within the space. So Bruno, I wanted to ask you, you know, of course, the DLT Act, really key legislation in Switzerland. I mean, Switzerland is certainly looked at as one of the jurisdictions that have the most regulations within the crypto space. You know, do you think that Switzerland has been increasing its regulatory oversight of recent you know, months or even years, and kind of like what is the driving force behind, you know, wanting to be ahead of all these different countries around the world when it comes to crypto regulations?
I mean, the first statement I would say, I mean, obviously, some companies are now considered under the umbrella of FINMA supervision, and that by default increases the regulations they have to follow, even though the respective framework, the policies have been there already, but it's just a question, are you subject of it or not? So that's, I think, one driver. From a fintech perspective, there might be, yes, a big a chunk of new regulations to follow, even though they have been there for traditional assets already since a long time. It's rather an evolution. I would also bring into the discussion the topic, it's not only the pure regulation around products, crypto, DLT, what we have been discussing before, but at the end it also comes into regulation about identification, because you are obliged to identify a client if you take if you deal with assets. So and there obviously we also see an evolution started from video identification, which has been accepted like a face-to-face identification quite a while. We also have since I think mid of May the new regulation around online identification, up to which thresholds can you use this type of regulation. I think here we come back into the business cases of fintechs, because if for each and every identification you need to go through a video process, then obviously you kind of exclude the very low margin mass business, but you by default can only create a positive business case if you have high volumes or high amounts in it. And I think if we consider the full landscape of regulation, at least I would say there has been an increase, even though a portion of it was also streamlining, as Lars was highlighting it.
Right. That makes a lot of sense. Well, you know, oftentimes I think it's great being a leader when it comes to, you know, regulations and stuff like that, especially in crypto. And I think, you know, certainly Switzerland has gotten a lot of notoriety out of taking the charge, especially within the EU. But, you know, there's always this conversation going around about how regulation stifles innovation and kind of deters businesses from setting up in jurisdictions. But that doesn't seem to be the case in Switzerland. And, you know, from a conversation, it really does seem like it's driving a lot of demand, or it's seeing a lot of demand. Bruno, just to kind of continue on your thoughts previously, what do you think makes Switzerland different compared to other jurisdictions when it comes to the crypto industry and kind of the I guess the environment that has been created there?
I think in Switzerland, the trend and the transformation towards digital assets and virtual assets has been accepted as a fact which is happening, and therefore I think that makes the biggest difference, which means that you don't have to explain from the very basic that you are going to leverage blockchain technology for something. You can really start how you fulfill the anti-money laundering regulations. How do you make sure that identification is properly documented? And you kind of can focus on those topics. So, but it's not anymore a question mark whether that ever will be the future. I think it's accepted, and it's now embedded even into the overall framework for the financial market. So I think that's the biggest difference, so kind of an early mover advantage. And as some mentioned before, we can also say it has a certain disadvantage that it is regulated, where in other markets it might not be yet regulated. But overall, I think it's kind of a first mover advantage, and the regulator, in my perception, at least for regulators, he was moving quite fast.
Definitely. And Ekaterina, I certainly want to hear from you on this as a board member of the Crypto Valley Association, and, you know, world renowned in terms of really pushing the industry and really helping that, you know, confluence of crypto into traditional finance, and, you know, planting that seed and really growing that seed. From your perspective and the perspective of the CVA, how has Switzerland succeeded where others have failed?
Well, just to continue the statements of Bruno, I absolutely agree that, you know, from Crypto Valley Association and all our members, we, you know, our goal is to promote Switzerland for the doing business here in the crypto space. And I would say regulator in Switzerland is very open, and you can always ask questions and receive answers. This is a big case in many jurisdictions, I would say. And if we just look at the objectives of financial market supervision, for example, and this is a key area for blockchain industry, it's to protect individuals, to protect creditors and investors, and also policy holders as well. But it's also to protect market functioning. And I think here in Switzerland, the regulator contribute a lot to enhance this positive reputation, and makes the Switzerland more competitive. We, you know, the regulation actually cover everything we need at the moment for the up-to-date needs of the industry. And in comparison with other jurisdictions, we are really a role model how to handle crypto business. And it's provided, as I said, enough legal certainty on how to conduct really business with digital assets. And as Bruno said, the revolution is not, you know, in a queue, in line. It's just happening here. And we already admitting that we have so many new players coming, and the traditional players turning into the digital format. So from also tax perspectives, I would say Switzerland is really attractive for such businesses, and some cantons are pretty efficient and very crypto friendly. So did the canton Zug, for example, where we have the majority of crypto projects in Switzerland, and Crypto Valley, which, you know, in Crypto Valley Association, where I now act as a board member, we really see a lot of interest, and community is growing fast. just to give you statistic, at the moment we have around 5,000 people working in Switzerland in crypto industry in 1,000 companies. And the capitalization of top 50 companies in crypto is 260 billions. It's a quite big ecosystem already. And let's say we have more than 10,000 members associated with Crypto Valley around the globe. And actually, Merkle Science is one of them. Yes.
Yes, absolutely. Yeah, no, certainly. And you know, when we think about regulations and we kind of like, of course, have a very global view of it. And, you know, Switzerland certainly, you know, on the forefront, and also Singapore on the forefront of crypto regulations. What we're actually seeing is that, you know, it's really encouraging traditional industry and finance to move in as well, and really invest that, like, you know, research and investment into the space. So you're seeing a lot more, you know, interesting developments, innovation in those jurisdictions. So it's super encouraging to look at and see. So Lars, I wanted to ask you, in terms of the challenges for Swiss crypto businesses. We've talked about how, you know, Switzerland is a great place for crypto startups, and, you know, how Crypto Valley and Zug is so great for the startup industry in crypto. But from your perspective, you know, what are the biggest challenges then when it comes to crypto businesses, when it comes to compliance? Like, what, let's say you're a new business looking to move to Switzerland, what should they be paying attention to, and what can be a challenge?
I think one of the biggest challenges in Switzerland for new startups or new business ideas is the extensive application of the banking law in Switzerland. This is quite unique in the world. Usually banking is defined in domestic jurisdictions as a variety of activities or factors that need to be present so that you're called a bank. And also, especially in the European Union, you have a lot of different regulations which are covering specific business models, such as an e-money license or a payment service provider license. These licenses do not exist in Switzerland. And in Switzerland, you are considered a bank if you take public deposits. And this is basically defined if you have more than 20 outstanding claims from clients to your balance sheet. So you are being in a banking activity rather quickly. And if you're not familiar with the legal environment of Switzerland, this is one of the biggest challenges, because FINMA is obviously super strict when it's going into the direction of having activity which is not covered by a banking license. So I think this is one of the pitfalls where one needs to pay close attention. The other important aspect is the AML regulation. As soon as you're having an AML financial intermediary activity, the scope of the AML Act in Switzerland is rather broad. So you have the minimis thresholds, you have some exceptions, but in general, the duties you need to maintain are widespread. So it starts with identification, beneficial ownership, but also transaction monitoring, sanction screening. We talked about the travel rule. All these things are basically originating from the duties under the AML Act. And I think this is also a little bit special to someone who's not familiar with the legal regulatory landscape, that we have such a flexible regulatory framework that you can do crypto business rather easily, but the traditional financial market laws apply rather quickly. And I think this is the main challenge for new market participants or new market entries. When you already are a financial market participant and you are offering your services, then we also covered already the important topics. So one is scalability. So the processes that need to be robust and also scalable. This is a big challenge for players. Then also the speed. not only the speed of new invention in the area of cryptos. I mean, 2 years ago, DeFi was basically not known or wasn't used that much. NFTs are a rather new topic. All these constant innovations are also a challenge to keep up with the regulatory assessment within your business model, but also the speed of regulation. So the cycles between new regulation get shorter. What was true in 2017 for crypto businesses is no longer the same today. The principles may be the same, but there are more refined legal bases and frameworks, which you constantly need to monitor, to assess, and then also implement into your business. Travel rule is a very nice example. Nobody talked about the travel rule in 2017 for crypto assets, while now everyone has a key concern how to implement that correctly. That's why also the protocols such as OpenBus came up in Switzerland. So I think these are some of the challenges you face if you're a new one, or if you're already an existing service provider. You need to keep the focus on the innovation, on the product, and also on the regulatory side.
Absolutely, totally agree with that. I mean, like that's certainly something that we kind of mention to all our clients, potential clients, that it's a constant education thing. So it's really important for industry association companies, no matter what type of crypto company, if you're just like, even if you have indirect risks when it comes to crypto exposure, to stay on top of kind of the changing technology and how people are actually using it. So that's a fantastic point. So we're just wrapping up near the end of the panel for today. But before we leave, I did want to ask all our panelists, what advice would you give to Swiss-based crypto businesses looking to fight crypto crime and comply with local and global regulations? Bruno, why don't we start with you?
I mean, to me, I think the major advice is treat crypto business as any other financial business. If you come from a regulatory perspective, I mean, it might kind of jeopardize a bit the gold digger spirit, but at the end, you're dealing with with money or with assets to a certain extent, and that's you need to adhere to same principles, being anti-money laundering, being as said by Lars, banking type of laws you have to apply, and therefore I would even advise fintechs to get quite early people on board who knows about Swiss banking regulations, and obviously talk also at the very early stage to legal advisors about your own status, because it's kind of there. I think Lars mentioned there's a pitfall. If you once after a sudden you are under a regulatory umbrella you didn't intend to go. So and I think those are my point of view, the key advices I would give.
Sorry. Ekaterina, what about you?
I just will support the statement of Bruno that you need to be aware about regulation in advance when you start your business and plan. You create your business plan, your budget. It's important to take into consideration the costs associated. It's still Switzerland, quite attractive country because of reputation, because we have really strict regulation which guarantee protection and for investors, for example, but also it can cost more money. But you also need to be aware that it's not like immediately you have to hire, if you create a bank, you need to hire the full bank staff. You can outsource a lot of things. It's a law allowed in Switzerland, and you can have part-time job, but you need to have professionals. And it's important to do everything right from the beginning, because if you create a website and state for everyone that you are brokerage platform and you don't have license, you can have really big problems. So you have to be very careful, step by step, and patient. In Switzerland, when you deal with the regulator, they will be open with you, but it will take time. And if you want to do something tomorrow, maybe you have to go to some different jurisdictions, but we don't know about the result. So be patient, and if you really come with the business for a long time, Switzerland is a good jurisdiction for you.
That's fantastic. And last but not least, Lars, anything else to add here?
Yes, I can fully support what was said. Maybe I would add something that is more from the business behavior of the participants in the market. So I would say their focus is one of the key elements, because we have a strict regulatory framework which applies. Focus on what you want to offer and how you want to offer that is certainly important. Then you only need to look at the selected few questions, and you don't need to answer all the questions from an asset management license to a banking license to everything. So I would say this is important. And the second one is also to understand and be able to distinguish between the cycle of innovation in the market and the cycle of innovation you can actually maintain in a regulated environment. So yes, eventually you cannot offer all the services instantly that you would like to, but it takes you a lot of time to do it when you have properly assessed it. And I think this is an important factor also for everyone active in the firm. It's also what Ekaterina said, it needs some patience, but it pays off.
Fantastic. So that wraps up our panel for today. Thank you very much to our speakers. Really appreciate your time today and sharing your expertise with us, and to all the attendees as well. Yeah, so I think after this webinar, we're happy to share contact information of how you may be able to reach our speakers, and ask any additional questions that you may have, or if you guys have any additional questions for us, we're happy to answer your questions as well. Thank you very much for your participation, and enjoy the rest of your day.
Thank you very much.
Gaby.
Thanks, guys.
Bye.
Bye.
Bye.